Florida's housing market collapse, which was already starting before Hurricane Ian, just got even worse. Now, I think we're going to see huge declines in home prices in Florida over the next 1 to 2 years. Because when I take a look at home prices right now in a market like Cape Coral and Fort Myers, which is one of the hardest hit areas by this hurricane, I see a market that was destined for a home price crash even before the hurricane. The typical home price in Cape Coral has boomed all the way up to $430,000. That's 10 times higher than the average worker wage in a year, which is $43,000. And that was driven by all the mania that occurred during the pandemic. So now, after this hurricane, after all this destruction, we are going to see two big effects, especially in Southwest Florida. Number one is going to be fewer people moving in, specifically fewer people moving in to buy a house. But number two, another effect we're going to see is a mass migration out of these areas. This is something a lot of people aren't thinking about right now, but it's going to happen over the next 6 to 12 months. The reason I feel confident in predicting this is because if we look at past hurricanes in Florida that were really bad, like Hurricane Michael that hit Panama City Beach in 2018, we see the next year in Panama City Beach, they lost 12,000 people due to outbound migration. That was 7% of the Panama City Beach metro that left. So something very similar is going to happen here in Southwest Florida. Now, an interesting question to ask is, where are these people who are leaving? Where are they going to go? And obviously, some of them are going to stay in Florida. Maybe they'll move to Lakeland. Maybe they'll move to Orlando. Maybe they'll move to northern Tampa. So there could be a benefit, actually, to some of the local housing markets surrounding Southwest Florida. There could be a short-term increase in migration that causes specifically rents to go up. Because if we look at previous hurricanes, like what happened in Panama City Beach, the typical effect is in the short run, rents go up because you have all these people who are displaced. I mean, just take a look at the images of Fort Myers right now. A lot of the homes got absolutely leveled, especially a lot of the mobile homes in Southwest Florida got tossed around and are no longer there. So in the short term, rents go up, but actually home prices go down. The reason is people don't really want to buy a house in the aftermath of a big environmental disaster. And this is going to be especially true for Florida, because Florida's housing market, like I showed you in Cape Coral, the local home buyer is completely priced out of the market given how high prices are. So that housing market in Cape Coral and many parts of Florida is purely driven off inbound migration, people moving in with money from other cities, investors with money from other cities. And those are the people now who are not going to be coming in anymore due to this hurricane. We're going to have fewer people moving in mixed with a lot of home building and reconstruction. The positive in all of this is that the areas in Florida that got hit hardest by Hurricane Ian, these are the locations in America that actually have the highest rates of home building. If we look at this table of the top 10 home building metro areas in America, we could see that Myrtle Beach and Austin are number 1 and number 2 in terms of housing permits per capita, but then the next 6 cities are all in Florida, particularly Southwest Florida. We have Northport, Sarasota at number 3, Naples at number 4, Lakeland at number 5, Cape Coral at Fort Myers at number 6. We go to Port St. Lucie, number 7 on the East Coast, and then we have Ocala, number 8 further up on the West Coast. So the silver lining in all of this is that Florida, particularly Southwest Florida, has the existing home building infrastructure to build homes and rebuild quickly after this disaster. But there's another trend actually in Florida's housing market that you all need to be thinking about, especially if you're someone who lives there or is looking to move there, is that we will also see a big increase in mortgage defaults, particularly strategic defaults, where there's a lot of homeowners in Florida right now who bought at a sky-high price over the last 2 to 3 years, who maybe used an FHA loan where they only had to put 5% down, who maybe don't have the strongest level of insurance. Well, if their home got messed up, they are likely to walk away from it and default. This is, again, something we have some existing data on. CoreLogic did some analysis on what happened in Louisiana after Hurricane Ida in September 2021, and what they found here is this blue line, serious delinquency rate on mortgages after Hurricane Ida. It spiked in Houma, Louisiana, the metro area that was most impacted. You could see the serious delinquency rate went way up. It increased like about 50% on a relative basis. So to recap at this point, we're likely to see a big decline in migration. We're also potentially going to see a short-term increase in rents. We're also going to see likely a big surge in home building and permitting to rebuild to go along with an increase in mortgage delinquencies. But as I said in the beginning, the biggest impact this is going to have on the state of Florida is the elimination, kind of the piercing of what I call the Florida delusion. This was the idea that built over the last 2 years since the pandemic started, that if someone moved to Florida or if an investor bought in Florida, they were getting something great, like their life was going to be improved. This was the place to be. Florida's where all the action is. That idea is now obliterated due to this hurricane, and that's going to lead to a big decline in migration across the state. We could see a repeat of what happened in the mid-2000s in Florida, where you could see historically the migration in 04-05 surged into Florida. We saw record amounts of people moving at the peak of that last housing bubble, but then look what happened a couple years after that, which ironically was a couple years after the last string of hurricanes in Florida in 04-05. We saw a massive plummet in migration into Florida, going from 533,000 in 05 all the way to negative migration in 08-09. Given the amount of homes that Florida builds every year, right next to Texas, it's the #1 home building state in America. Any decline in migration or investor interest is going to cause home prices to go down, especially with what's likely to happen to insurance rates in Florida. I mean, the estimates of insurance claims right now from this hurricane are around $30 billion, and Florida was already having issues with its property insurance market before this. Those issues are likely to get even more exacerbated, and expect those home insurance rates in Florida to go through the roof over the next year, which is going to make home ownership more expensive and dissuade people from owning, which is inevitably going to drop the price on home values, which again is another silver lining in all of this. While there will be a lot of struggle for people in Florida resulting from this hurricane, the home insurance rates are going to go up, the prices are going to go down. We're going to see prices in Florida go down more to the historical norm. Looking at a statistic called PE ratio, which I developed at Reventure Consulting, we looked at that for Cape Coral earlier in this video, and we found out Cape Coral is as expensive as Boston for the local home buyer. That's not going to continue. Prices in Cape Coral are probably going to go down by 30% over the next couple of years and bring affordability more in line with what that local earning $43,000 can afford. The same thing in a market like Tampa. Tampa's PE ratio is now 40% above its long-run average. It's even higher than it was in 07 at the peak of the last housing bubble. So, forgetting just the hurricane for a second, we were already going to see prices go down in Florida, and this hurricane is simply going to accelerate that. How about Miami? Miami's PE ratio is 9.4, again, higher than it was in 07. So these housing markets in Florida, everyone, they're more expensive today than they were at the peak of the 07 housing bubble, which suggests, right, like there must have been some crazy narrative, crazy things going on to drive prices even higher than they were in 07 for the local home buyer. So now that that narrative is pierced, expect home prices in Miami to go down. Maybe not by 33%. I think Miami is going to be more resilient to this housing crash in Florida than other cities, but certainly a correction in Miami is coming. And I want to be clear about one thing. While this video might sound overly cynical on Florida and potentially insensitive, that's not my intention. I'm simply trying to understand from a data-driven perspective what's going on in the housing market. And look, there's a lot of great things about living in Florida. The weather's warm. It's a state that embraces freedom. People there are generally really nice and laid back. Like, there are a lot of positives to living in Florida. And those positives have really been accentuated over the last 2 years with this Florida delusion, so to speak. But the problem with the Florida delusion is that it ignored the negatives of Florida, right? Like its exposure to getting hit by hurricanes, its humidity, its lack of affordability, its lack of a strong local economy. And now that this Florida delusion is pierced, more and more people, particularly corporate real estate investors, particularly people buying second homes who have a lot of money, they're going to focus more and more on those weaknesses. So it's not like the positives of Florida went away. The positives are still there, but now there's going to be a more, let's call it, balanced perspective on what Florida is as a place to live and what it is as a housing market. So my message to someone out there who's looking buying in Florida, particularly Southwest Florida, if you've waited, I think you're going to be rewarded for waiting. And maybe you're going to want to wait a bit longer now at this point to see how the rebuilding goes, especially in some of these hard hit areas. But I see prices going down. My models say from affordability perspective, prices are going down 30%, potentially 40% in some of these markets. And this hurricane is likely to accelerate that due to the tremendous drop off in buyer demand that I suspect is coming. Now, that's just my opinion based on my read of the data. I'm curious what you guys think, especially if you were someone who is looking to move to Florida. Is this hurricane changing your perspective? Do you still want to move there? Are you potentially changing where you would move in Florida? Maybe more of the inland destinations further away from the beach will become more popular because they're not as exposed to these type of hurricanes. Maybe people will start to have a preference for newer built homes because they're going to be able to better withstand hurricanes and will have lower property insurance rates. There's probably a lot of different micro dynamics that could happen here. And what I want to hear, everyone, is your thinking and your feedback on all of that, particularly if you're someone who's looking to move to Florida and if you're someone who lives in Florida currently. And by the way, if you do live in Florida, particularly in these Southwest Florida markets, please let us know in the comments that you are okay and that you withstood the storm. I know I have a lot of viewers there, and I just want to check in on you guys. Now, one last thing, everyone. In the beginning of the video, I said that Florida's housing market collapse had already started. And what I meant by that was the fact that a lot of markets in Florida had really big inventory growth year over year, which is what this graph is showing. The top 15 markets in America in terms of how much inventory was added to the housing market. And you can see Lakeland, Florida comes in at number 5 at plus 150%. Northport, Cape Coral, and Tampa are number 9 through 11 at over 100% inventory growth. Jacksonville came in at number 14 with over 84% inventory growth. So we were already seeing the inventory really build. The buyers were falling out of the market. We had more sellers coming to the market. So Florida's housing crash, in my estimation, was already starting prior to this hurricane, and it's going to continue after the hurricane. However, it might look a little different. Inventory might actually go down over the next couple months, which is nothing to be alarmed about, because I think the home sales are going to go down by even more. So I will be tracking the Florida data in coming months. If you want to see it, if you want to stay updated with it, make sure you're a subscriber to this channel and smash that like button.